$100 silver unlocked. The day J.P. Morgan flipped from the biggest silver short in history to the biggest silver whale, accumulating 750 million ounces while everyone was looking the other way. Between June and October 2025, while financial media was obsessing over tech stocks and cryptocurrency drama and political theater, while retail investors were chasing meme stocks and arguing about Federal Reserve policy, while the world was distracted by 1,000 different shiny objects, something absolutely seismic happened in the silver market that almost nobody noticed, something that will be studied in finance textbooks for decades, something that represents one of the most audacious reversals in commodity trading history. J.P. Morgan Chase, the same bank that paid $920 million in fines in 2020 for manipulating silver prices downward for 8 years, the same bank that for over a decade held the largest short position in silver futures and was accused by traders and regulators alike of systematically suppressing silver prices through spoofing and flooding the market with paper contracts, the same bank that epitomized everything wrong with precious metals manipulation. That bank, that criminal enterprise that had been the Death Star of silver suppression, quietly and methodically sold its entire 200 million ounce paper short position, walked away with 0 short contracts for the first time in its modern history, and simultaneously accumulated over 750 million ounces of physical silver, the largest stockpile of physical silver in human history, equivalent to nearly a full year of global mine production, more silver than most countries have ever seen. And this wasn't a gradual shift. This was a calculated demolition of one position and construction of another. This was J.P. Morgan looking at the silver market and reaching a conclusion that should terrify every other bank that's still short, should electrify every silver investor who's been waiting decades for manipulation to end, should send shockwaves through industrial users who suddenly realize they're competing for supply with the most powerful bank on earth. Because when J.P. Morgan switches sides, when the biggest bear becomes the biggest bull, when the manipulator becomes the accumulator, that's not just a position change, that's a declaration that the game is over, that silver prices can no longer be suppressed, that the fundamentals have become so overwhelmingly bullish that even the banks that profited from suppression are now buying physical metal as fast as they can, and the implications of this flip, the consequences of J.P. Morgan going from 200 million ounces short to 750 million ounces long in just 4 months, will reshape the silver market in ways that make $100 silver look conservative, that make the Hunt brothers' attempted corner in 1980 look amateurish, that set up the potential for the greatest commodity squeeze in modern financial history. Let me take you back to understand what just happened, because this story doesn't make sense without understanding J.P. Morgan's history in silver. And that history is long and sordid and criminal. J.P. Morgan has been the dominant force in silver futures markets for decades, held massive short positions on COMEX that were so large they regularly controlled 30 to 40% of the entire commercial net short position. And these shorts weren't hedges, weren't legitimate commercial positions from a company that mines silver or uses silver industrially. These were naked speculative shorts designed purely to suppress the price. And J.P. Morgan executed this suppression through tactics that were eventually proven to be illegal, specifically spoofing, which involves placing massive sell orders to create the appearance of supply and scare other traders into selling, then canceling those orders before they execute. Do this enough times and you can push prices down systematically, and J.P. Morgan did this thousands of times between 2008 and 2016. So systematically that the Department of Justice and Commodity Futures Trading Commission investigated for years, brought criminal charges against J.P. Morgan traders Michael Nowak and Greg Smith, who were convicted in 2023, and ultimately J.P. Morgan paid $920 million in fines, admitted to a pattern of manipulation spanning 8 years, and supposedly cleaned up its act. But the fines didn't stop the suppression, didn't end J.P. Morgan's dominance in silver shorts. The bank continued holding massive short positions through 2024, continued to be the primary force keeping silver prices below $30 to $35 per ounce, and silver investors, the people who had been buying physical silver for years or decades. They knew that JP Morgan was the enemy, that every time silver tried to rally above certain levels, it would get slammed back down during New York trading hours, specifically during the morning when COMEX volume was thin and a large seller could move the market. And data analysis confirmed this. Gold charts are analyzed every silver futures trading session from 2007 to 2013 and found a clear pattern. Sharp price slams during New York morning sessions followed by recoveries in the afternoon and overnight as Asian and European markets opened, and this exact pattern continued through 2024 and into 2025, was so consistent that traders could set their clocks by it, and everyone knew who was doing it. Everyone knew that JP Morgan and a few other bullion banks like HSBC and UBS were flooding the market with paper silver every morning to keep prices suppressed, creating a price ceiling around $32 to $33 that silver couldn't break through. And the question silver investors asked for years, the question that seemed almost naive in its optimism, was, what happens when JP Morgan flips, when the biggest short decides that suppression is no longer profitable, when the manipulator becomes the accumulator? Because basic game theory suggested that eventually this would happen. Eventually JP Morgan would look at silver fundamentals and realize that fighting them was stupid, that the smart play was to cover the shorts, accumulate physical, and ride prices higher, and cynical investors said this would never happen, said JP Morgan shorts were too large to unwind without causing a massive squeeze, said the bank was trapped in its position, but optimistic investors said no, wait, JP Morgan is smart, they're criminals but they're smart criminals, and when they see the writing on the wall they'll flip, they'll find a way to exit shorts and go long, and when that happens, when JP Morgan switches sides, that's when silver explodes. That's when decades of suppression end and real price discovery begins, and those optimistic investors who waited patiently and kept buying physical silver at artificially low prices, they were right, they were absolutely right, because in 2025 JP Morgan did exactly what they predicted. The mechanics of how JP Morgan executed this flip are important because they reveal just how calculated this was. Between June and October 2025, JP Morgan systematically sold its 200 million ounce paper short position, unwound it completely, and this wasn't done dramatically in one massive covering rally that would have sent silver prices vertical. Instead, it was done methodically, using liquidity from multiple sources, covering shorts when prices dipped, spreading the covering across multiple months, and crucially, JP Morgan was able to do this because other banks were still short. Other banks like HSBC and UBS and Deutsche Bank were still holding massive short positions, still suppressing prices, still providing the liquidity that JP Morgan needed to exit its shorts without causing a squeeze. And this is brilliant but also ruthless. JP Morgan basically threw other banks under the bus, left them holding the bag because now those other banks are trapped. They're the ones with massive short positions, they're the ones who will have to cover eventually. And when they cover, they'll be buying from JP Morgan. They'll be forced to pay whatever price JP Morgan demands. And JP Morgan knows this, knows that by flipping first they've positioned themselves to profit from the squeeze that's coming, from the panic covering that other banks will have to do. And simultaneously with covering its shorts, JP Morgan was accumulating physical silver, not just a little physical silver for hedging purposes, but massive quantities. The bank added 21 million ounces in just 6 weeks between late August and early October, was accumulating at a rate that exceeded many countries' annual production, and by October JP Morgan held over 750 million ounces of physical silver, and this accumulation happened through multiple channels, through COMEX vaults where JP Morgan is one of the major custodians, through ETFs like SLV where JP Morgan is the custodian and can accumulate physical silver while showing it as client holdings, through private market purchases that don't appear on any public exchange, and the result is that JP Morgan now controls what is almost certainly the largest single stockpile of silver in the world, possibly the largest stockpile of silver ever assembled by a private entity, larger than what the Hunt brothers accumulated in 1980, larger than most central bank reserves. And this isn't paper silver, this isn't futures contracts or ETF shares, this is physical metal, this is Bars sitting in vaults, this is silver that JP Morgan owns outright and can't be called away or margin called or regulated out of existence, and that distinction is absolutely crucial. Because the Hunt brothers attempted silver corner in 1980 failed specifically because they accumulated paper silver, they bought futures contracts and took delivery, but their position was leveraged, was built on borrowed money, and when the CFTC changed the rules, when they restricted new long positions and increased margin requirements, the Hunt brothers couldn't meet their margin calls, were forced to liquidate, and silver crashed from $50 to $10 in a matter of weeks. But JP Morgan has learned from that history, has structured this accumulation differently. They sold their shorts first, freed up cash, and used that cash to buy physical, no leverage, no margin calls, no way for regulators to force them to liquidate. And this means JP Morgan's position is unassailable. They can hold this silver indefinitely, can wait for prices to reach whatever level they want, and there's nothing the government or regulators or other banks can do about it, because owning physical silver isn't illegal, storing it isn't illegal, waiting for prices to rise isn't illegal, and JP Morgan has enough political connections and legal resources that any attempt to break up their position would fail, would probably backfire spectacularly. Now let's talk about why JP Morgan flipped, why after decades of suppressing silver they suddenly decided to become the biggest silver bull. And the answer is fundamentals. Silver market fundamentals have become so overwhelmingly bullish that even JP Morgan, even the bank that profited enormously from suppression, had to admit that suppression couldn't continue, had to admit that trying to fight these fundamentals would eventually result in catastrophic losses. And what are these fundamentals? First and most important, silver has been in a supply deficit for 5 consecutive years, meaning global demand exceeds global mine production, and this deficit is accelerating. In 2024, industrial demand alone consumed over 600 million ounces, with solar panel production using 120 million ounces and projected to grow 15% annually through 2030, with electric vehicle production using increasing amounts for electrical contacts and battery components, with electronics demand remaining strong, with 5G infrastructure requiring silver for circuits and antennas, and on top of industrial demand there's investment demand from people buying coins and bars and silver ETFs, and jewelry demand from India and other countries. And when you add all this up, total demand is over 1.2 billion ounces in 2025, but annual mine production is only about 830 million ounces, which means a deficit of nearly 400 million ounces that has to come from above-ground stocks. And here's the terrifying part for anyone who's still short silver: above-ground stocks are extremely limited total visible inventories. The silver that's in vaults and available for purchase is estimated at maybe 1.5 billion ounces globally, and much of that is held by investors who aren't selling, who are stacking silver long-term, which means the liquid supply, the silver that's actually available for industrial users and traders and banks who need to cover short positions, might be only 500 to 800 million ounces. And if demand keeps exceeding supply by 300 to 400 million ounces annually, those stocks will be depleted in 2 to 3 years, maybe less, and once stocks are depleted, once there's no buffer supply to meet demand, prices will have to rise dramatically to either reduce demand or incentivize more production. And JP Morgan looked at this math, looked at these supply-demand fundamentals, and concluded that silver prices are going much higher, that $30 to $35 per ounce is absurdly low, that fair value is probably $50 to $75 minimum and could easily go to $100 to $150 or higher if there's a squeeze or if investment demand accelerates. And at that point, continuing to hold massive short positions would be financial suicide, would guarantee enormous losses. So the smart play, the only rational play, was to flip to cover shorts, while they could still cover them without prices going vertical, and to accumulate physical while prices were still artificially low. But there's another reason JP Morgan flipped, a reason that's even more important than supply-demand fundamentals, and that reason is gold, because gold broke out in March 2024, went from struggling to hold $2,000 per ounce to surging past $2,100, then $2,200, then $2,300, and kept climbing, and JP Morgan and other banks tried to suppress gold the same way they suppressed silver. But they failed. Gold's fundamentals, driven by central bank buying and geopolitical uncertainty and dollar debasement. Fears were too strong, the suppression tactics didn't work, gold kept rallying, and eventually the banks gave up, stopped fighting gold, let it run, and gold went to $2,600, then $2,700, and kept climbing. And once gold broke free from suppression, once it proved that the banks couldn't control it anymore, JP Morgan realized that silver would be next. That silver's breakout was inevitable, that the same forces driving gold, the same loss of confidence in fiat currencies and the same search for real money and the same central bank diversification away from dollars, all of this would eventually push silver higher, and fighting it would be futile, and so JP Morgan decided to get ahead of the move, to position themselves to profit from silver's breakout rather than being crushed by it. And the timing of JP Morgan's flip is revealing. October 2025, right when multiple catalysts were converging. The U.S. Mint announced shortages of silver coins, couldn't keep up with demand from retail investors. COMEX registered silver inventories. The silver that's available for delivery fell to historically low levels relative to open interest, lease rates. The interest rate for borrowing silver spiked to 8 to 10%, indicating extreme tightness in the physical market, premiums on silver coins, and bars expanded to $5 to $8 above spot prices, indicating that physical demand was overwhelming supply, and all of these were signs that the physical market was breaking, that the paper price suppression was losing its grip on reality, that the gap between paper silver and physical silver was becoming unsustainable, and JP Morgan saw this, saw that the manipulation game was ending, and made the decision to flip before other banks figured it out, before the scramble for physical silver turned into a full panic. Now here's where it gets really interesting, because JP Morgan's flip creates a feedback loop that accelerates silver's rise. Here's how it works. JP Morgan covering 200 million ounces of shorts removes massive selling pressure from the market. The daily and weekly price slams that used to knock silver down every time it rallied. Those slams are gone or dramatically reduced because JP Morgan isn't doing them anymore. And other banks still short, banks like HSBC and UBS, they can't suppress prices as effectively alone as the cartel could together. They don't have the same firepower, so silver starts to rally, starts to break through resistance levels that held for years. And as silver rallies above $32, above $35, above $40, two things happen simultaneously. First, industrial users panic, start hoarding silver, start placing orders for future delivery at any price because they're terrified of running out. And second, other banks still short start getting margin calls, start facing losses on their short positions, and they have to decide whether to double down and add to shorts or whether to start covering. And if they start covering, if they start buying silver to close out short positions, that buying pressure adds to the rally, pushes prices higher, which triggers more industrial hoarding and more short covering, in a self-reinforcing spiral that feeds on itself. And JP Morgan sits there holding 750 million ounces of physical silver, watching this unfold, watching prices climb, watching other banks scramble, and JP Morgan doesn't have to sell, doesn't have to provide liquidity, can just hold and watch their position appreciate, can wait until silver hits $75 or $100 or $150 and then decide whether to sell some or keep holding. And this is an unprecedented position of power. Is JP Morgan essentially cornering the silver market legally, not through futures manipulation like the Hunt brothers tried, but through patient accumulation of physical metal at artificially low prices that they themselves created through decades of suppression. And there's a beautiful karmic justice to this. JP Morgan spent years suppressing silver prices illegally through spoofing and manipulation, paid $920 million in fines for doing so, but that suppression allowed them to accumulate massive quantities of physical silver cheaply, and now they're positioned to profit from the end of that suppression, positioned to make back that $920 million fine many times over. And there's nothing anyone can do about it because they're on the right side now. They're long physical silver, they're supporting higher prices, they're no longer the manipulator, they're the whale, and whales don't get prosecuted for holding assets. The implications for other banks still short are catastrophic, and this is where the story gets really dramatic because banks like HSBC and UBS and Deutsche Bank are still holding massive short positions. Deutsche Bank has been particularly aggressive in silver shorts, and these banks are now in an impossible position. They're short a metal whose price is starting to rise, whose fundamentals are overwhelmingly bullish, whose biggest suppressor just flipped long, and they have to make a decision. Do they hold their shorts and hope that somehow silver comes back down, hope that industrial demand falls or mine production increases or investment demand collapses? Or do they cover now while they still can? And covering means buying silver, means adding to demand, means pushing prices higher, but holding means facing potentially unlimited losses if silver keeps rallying. And this is the classic short squeeze dynamic. Shorts trapped between bad and worse options, and the longer they wait to cover, the worse it gets, because every day that passes, every dollar that silver rises, makes their losses larger and makes it harder to find physical silver to buy for covering. And at some point, maybe when silver hits $40 or $45 or $50, at some point these banks will break, will capitulate, will start buying frantically to cover shorts, and that buying will push silver into the $60s, into the $70s, maybe into the $80s or higher. And retail investors, the people who have been stacking silver for years, who bought at $20 and $25 and $30 while being mocked by financial advisors who said silver was a barbarous relic that would never rise, those investors are about to be vindicated, are about to see their patience rewarded, are about to experience what happens when decades of manipulation end and real price discovery begins, and the gains could be enormous. Silver going from $30 to $100 is more than 3x, is life-changing. Money for people who have been dollar-cost averaging into physical silver, and beyond the financial gains there's the satisfaction of being right, of understanding market manipulation before it was obvious, of seeing what JP Morgan and other banks were doing and buying physical anyway, and now watching those same banks scramble to buy the same metal they spent years suppressing, watching them compete for the same silver that retail investors accumulated patiently at lower prices. And there's justice in this, there's vindication in being the one who saw clearly when the system was rigged. But let's be clear about what $100 silver means, because it's not just about traders making money. $100 silver means silver is returning to its historical role as monetary metal, is being recognized again as real money rather than just an industrial commodity. Means that people globally are losing faith in fiat currencies, in dollars and euros and yen that central banks print without restraint, and are moving back to precious metals as stores of value. And this has profound implications for the entire financial system, for governments that rely on printing money to fund deficits, for central banks whose power derives from controlling money supply, for the whole Keynesian experiment of fiat currency that's dominated the world since 1971 when Nixon severed the dollar's link to gold. $100 silver means that experiment is failing, means people are rejecting paper money and demanding real money. And while that's great for silver holders, it's terrifying for governments and central banks, and they will fight it, will try to prevent silver from reaching $100, will use every tool available to suppress prices and maintain faith in fiat currencies. But here's the problem, the main tool they used for suppression, which was having banks like JP Morgan hold massive shorts and flood the market with paper silver, that tool is gone. JP Morgan flipped, and without JP Morgan's cooperation, without the biggest bank in silver markets willing to suppress prices, the government's ability to control silver prices is dramatically reduced. And there's a geopolitical dimension to this that most people miss, because China and Russia and other countries that are moving away from the dollar, they're buying gold, have been buying massive quantities of gold for years. China alone added hundreds of millions of dollars worth of gold to reserves in 2024 and 2025, and this gold buying is part of their strategy to reduce dollar dependence, to prepare for a world where the dollar isn't the global reserve currency. But silver is part of this. Story 2, because silver has always been money, has been used as currency for thousands of years, and if gold is returning to its monetary role, silver will follow, will be the working man's gold, will be the metal that ordinary people use for savings and transactions when they lose faith in paper money, and JP Morgan's flip, JP Morgan accumulating 750 million ounces of physical silver. This is a bet on that future. This is a bet that silver's monetary role is returning, that we're moving toward a world where physical precious metals matter again, and JP Morgan wants to be positioned for that world, wants to own a significant portion of global silver supply so they can profit from and influence that transition. The technical setup in silver right now, December 2025, is remarkably similar to gold in early 2024. Gold struggled for years to break above $2,000 to $2,100, kept getting knocked back down, and everyone thought $2,000 was the ceiling, thought gold would never sustainably rise above that level. But then in March 2024 something changed. Gold broke through $2,100 decisively, consolidated briefly, and then exploded higher, went to $2,600 in a matter of months, and silver is at the same point now, has been struggling to break above $32 to $33 for over a year, keeps getting knocked back down, but with JP Morgan no longer suppressing, with industrial demand accelerating, with investment demand growing, silver is about to break out just like gold did, and once it breaks decisively above $33 to $35, once it proves it can hold those levels, the move to $50 will be fast, and from $50 to $75 will be even faster. And at that point, $100 isn't just possible, it's probable, it's almost inevitable unless something changes dramatically, unless mine production suddenly doubles or industrial demand collapses or governments successfully suppress prices through new mechanisms. And none of those things are likely. The mining implications of higher silver prices are worth understanding. Because most silver mines were planned and built when silver was $15 to $25 per ounce, their economics were based on those prices, and at current prices around $30 to $33 these mines are profitable, are generating cash flow. But if silver goes to $60 or $75 or $100, these mines become fantastically profitable. Their operating leverage is extreme because their costs are mostly fixed, so every dollar of price increase drops almost straight to the bottom line, and this creates a fascinating dynamic where silver mining stocks could dramatically outperform silver itself, could go up 5x or 10x while silver goes up 3x, and investors who understand this, who buy silver mining stocks now while silver is still below $35, could make generational wealth, could turn tens of thousands into millions if the silver squeeze plays out the way fundamentals suggest it will, and there are dozens of silver miners, from major producers like Pan American Silver and Wheaton Precious Metals to junior explorers with promising deposits, and all of them will benefit from higher silver prices. All of them will see their stock prices explode if silver breaks out. But the real opportunity, the trade that JP Morgan has made and that retail investors can still make, is physical silver, actual coins and bars that you can hold, that you own outright with no counterparty risk, because physical silver can't be hacked or seized or diluted, can't go bankrupt or default or be manipulated by banks. It's just metal, is the same metal that's been valuable for 5,000 years, will be valuable 100 years from now regardless of what happens to governments or currencies or financial systems. And right now, December 2025, physical silver is still available at $30 to $35 per ounce, is still near historically low prices relative to gold, is still cheap by any measure, and this might be the last opportunity to buy at these levels, because once silver breaks out, once it goes above $40 and starts heading to $50, physical premiums will explode. Dealers will run out of supply. You'll be paying $10 to $15 above spot just to get coins or bars. And at that point, the opportunity will be gone. At that point, you'll be chasing prices higher rather than buying at the bottom. And so the time to act is now, before the breakout, before JP Morgan's flip becomes common knowledge, before everyone else realizes what's happening. The regulatory environment around silver is also important because JP Morgan paid $920 million in fines for spoofing silver prices from 2008 to 2016, and that settlement was supposed to end manipulation, was supposed to clean up the silver market, but manipulation continued through 2024, the same tactics, the same morning price slams, the same paper dumping to suppress prices, and regulators knew this, the CFTC knew this, but they did nothing, they allowed it to continue, and this tells you something important about how the system works, which is that regulators serve the big banks, protect the big banks, allow manipulation when it benefits the banks, and only step in when the manipulation becomes too obvious or when someone like the Hunt brothers who aren't part of the club tries to corner the market. And JP Morgan understands this, understands that as long as they're not doing anything obviously illegal, as long as they're just holding physical silver rather than manipulating futures markets, regulators will leave them alone, will allow them to profit from the squeeze they're engineering, and this is why JP Morgan's flip is so brilliant. They've moved from illegal manipulation to legal accumulation, from being the villain to being just another market participant, and they're going to make far more money from this flip than they ever made from suppression. The parallels to the 2008 financial crisis are striking because in 2008 the big banks had massive short positions in mortgage securities, were betting that housing prices would fall or at least stop rising, and they made fortunes when the housing market collapsed, made tens of billions of dollars shorting mortgages while ordinary people lost their homes, and that was presented as these banks being smart, being ahead of the curve, seeing problems that others missed. But in reality, the banks had helped create the housing bubble through reckless lending, and then bet against the very securities they had created, and profited from the collapse they had engineered, and that's essentially what's happening in silver. JP Morgan and other banks spent decades suppressing silver prices through illegal manipulation, kept prices artificially low, and now JP Morgan is flipping to profit from the inevitable spike in prices that will happen when suppression ends, is profiting from the squeeze they themselves created by holding prices down for so long. And this is legal, but it's also morally questionable, is another example of banks rigging the game to ensure they win regardless of what happens. And whether you think this is brilliant strategy or criminal behavior probably depends on whether you own JP Morgan stock or whether you're one of the retail investors who got crushed by silver manipulation over the years. But here's the thing, regardless of the morality, regardless of whether you think JP Morgan should be allowed to do this, the reality is that it's happening. JP Morgan has flipped, is now long 750 million ounces of physical silver, is now supporting higher prices rather than suppressing them, and this changes everything, changes the entire dynamic of the silver market, transforms silver from a manipulated commodity that can't rise above certain levels to a market where real price discovery is possible, where fundamentals matter, where supply and demand actually determine prices, and for silver investors who have been waiting years or decades for this moment, who kept buying physical silver despite the manipulation because they understood the fundamentals and trusted that eventually truth would win. This is vindication, this is their moment, and the next 12 to 24 months could be absolutely spectacular, could be the greatest precious metals bull market since the 1970s, could see silver go from the $30s to $100 or beyond, could see silver mining stocks go up 5x or 10x, could see a whole new generation of investors discover that precious metals aren't barbarous relics but are actually the only real money in a world of infinite paper currency printing. So here we are in December 2025, silver at $32, struggling to break above $33 to $35, and most people have no idea what's coming, have no idea that JP Morgan just flipped, have no idea that the biggest force suppressing silver for decades is now the biggest force supporting silver, have no idea that supply deficits are accelerating and industrial demand is soaring and above-ground stocks are depleting, have no idea that other banks are trapped short and will eventually have to cover at any price, have no idea that we're setting up for potentially the greatest commodity squeeze in modern history, and this ignorance, this lack of awareness, is what creates opportunity, because the people who understand what's happening, who connect the dots between JP Morgan's flip and silver fundamentals and the supply squeeze and the broader move away from fiat currencies. Those people can still buy physical silver at $30 to $35, can still position themselves ahead of the crowd, can still make the trade that JP Morgan just made, which is going long physical silver and waiting for the inevitable repricing that's coming. And whether that repricing takes silver to $50 or $75 or $100 or even higher, whether it happens in 2026 or 2027, one thing is certain: JP Morgan didn't accumulate 750 million ounces of physical silver because they think prices are going down. They didn't flip from the biggest short to the biggest long because they think silver will stay at $30. They flipped because they know something. They know that silver manipulation is ending. They know that decades of artificial price suppression are over. They know that fundamental value is about to be discovered, and they position themselves to profit massively from that discovery. And the only question is whether retail investors, whether ordinary people who don't have JP Morgan's resources or connections or inside information, whether those people will have the courage and conviction to make the same bet, to buy physical silver now while it's still cheap, while the opportunity still exists, while $100 silver is still locked, but the key is turning because JP Morgan just switched sides. And when the biggest bank in silver markets switches from bear to bull, from short to long, from manipulator to accumulator, smart money follows, and everyone else, everyone who waits for confirmation, everyone who needs to see silver at $50 before they believe it's going to $100, those people will be too late, will end up buying from JP Morgan at prices that make the bank tens of billions of dollars, will end up being the exit liquidity for the greatest precious metals trade of the decade. And that choice, that decision about whether to buy silver now or wait for confirmation, that's the choice that separates those who build wealth from those who watch others build wealth. And JP Morgan has already made their choice. The only question is whether you'll make the same one.